Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is September the 2nd, 2025. Let's take a look at Chicago wheat futures. This is the monthly continuous chart. Each candle represents a 1-month time frame. I want to show you something interesting here. I showed this here a few months ago. I have this little box in here representing this fractal. And you know what? If you close one eye and open the other, and you might see how this fractal looks very similar to this one over here, right? So the reason is you have this rally and this pullback, but look at the relationship between these moving averages, right? So we have the price trading below, consolidating below this. I'd say we're trading below this 200-month moving average. We also have the green 50-month moving average, which has acted as some sort of resistance back here in 1997, and over here and back here we saw this moving average, the 50-week month moving average, crossing below. It took another 3 years, but it crossed below the 200-month moving average, and that meant lower prices for another 3 years. Well, we're still in that situation right now. Does that mean another 3 years of lower prices? That takes us into, whatever, 2029. But it looks very similar in my opinion. Now the question is this going to consolidate sideways for a period of time as it did here before rallying higher? And that took, it was like 5 years really before we broke out of that low stretch. So I've been talking and have the belief that we're going to be in for a period of lower prices for quite some time. And I think that Chicago wheat market is a good indication where the wheat price is going overall. So yeah, keep an eye on that. So I'll change over the weekly chart. And I have these lines on here representing a descending triangle. It's one of my favorite chart patterns for breakdowns and for shorting. And yeah, we have this, what they call a descending triangle. Now we broke below that. We came back, got above it, which typically happens. Now the question remains, is this descending triangle going to continue lower? Is this trend going to continue lower? If you look at the moving averages, we're below all them. It suggests that it will. But as you get to the apex of these descending triangles, or even ascending triangles for that matter, the closer you get to it, if you get past 70% of the distance from the start to the apex, then the strength of that triangle formation is certainly reduced, meaning it goes from a high rate of completion, meaning lower, to a failure rate of higher. So its failure rate gets higher the closer you get to the apex. So what that means is, instead of breaking down, the closer we get to the apex, the possibility, the potential, the probability that we break out higher it starts to increase, and that could happen. So we want to keep an eye on these levels here. This level here is right around that 520 level. So we get below 520 in Chicago, again, get a closing week price below there, then I am certainly going to become bearish again. How bearish? My next level of interest gets us down to that 470 level, say $5 for a round number, but I don't know. We break below there, and I think we got to talk $5. We got to talk $4. I can't imagine getting below $4, but we have to remain open to that possibility. But let's look at the daily chart here. We got a few things going on here. So right today, we had a nice rally. This is the way these markets work. So this small purple line up above here is the anchored volume weighted average price from June 20th. And that's been acting as resistance. The price gets up there. Everyone who's been losing money gets back to breaking even. The average contract gets back to breaking even. So they exit their positions or they reduce their positions. It's been acting as resistance. This blue line is the anchored VWAP from August the 14 low. And that's been acting as what? It's been acting as support. So we're getting this pinching between these two VWAPs, pinching between these purple one from back in June high and the August low. So we're pinching. So one of those moving averages or one of those VWAPs is going to get broken. And either the buyers are going to win this little battle and we're going to push the price higher, or the sellers are going to win, and we're going to break below this 520 level, and the price is going lower. So it's a very interesting level for me. I'm keeping my eye on this to see what direction the price goes. The highest probability hypothesis is to honor the existing trend, which I would argue remains in a downtrend. But again, we got to see what happens at this 520 level. So keep an eye on that. I don't see maybe there's a buying opportunity at this VWAP. Put a stop down below here, below 520. Might be a low risk trade, but you make the trade your own. That's just an idea. So I'm not interested until we get in a long position, until we get above 534. I'm not interested in a short position until we break below 524. That's my strategy. That's how I like to look at things, but you make the trade your own. My name is Trent Klarenbach. Sunny in Saskatoon. Life's good.